Hi, guys. Welcome to the How I Raised It podcast, the show where you get an inside, unfiltered look at how real entrepreneurs raise capital for their businesses. I'm your host, Nathan Beckert, and today's episode is with Mike Bell of Miso Robotics, a company that makes robots for restaurant kitchens. Picture a robotic arm deep frying French fries, for example. The company raised a traditional Series A and B from VCs, then flipped the script and raised the next three rounds via crowdfunding. So we go deep into why crowdfunding and how to do it. If you're tuning into this podcast to learn how to raise capital for your business, I've created a super valuable free welcome package for you. It includes a list of 2,500 investors who don't require a warm intro, plus 200 questions that investors are going to ask you. So this is really going to help you get ready to raise capital. To get instant access to this, click the link in the first comment. While you're there, please leave us a nice comment or like the episode. We really appreciate that. Last but not least, if you enjoy this conversation and think someone else would too, please share it with them. Hit that subscribe button to get all our latest episodes. Thank you. Now sit back and enjoy the chat with Mike.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by foundersuite.com. Today I have Mike Bell of Miso Robotics. How's your day going?
Hey, Nathan. It's going great. Good to connect with you today.
Where are you located?
Southern California, Manhattan Beach specifically. The company is headquartered in Pasadena, other side of LA.
Got it. Cool. Manhattan Beach is a cool little town, I guess you could say.
It is. It's a good place to hang out. That's for sure.
Good. Well, let's jump right to it. What is Miso Robotics? You do some cool stuff, so tell us about the business.
Yeah, Miso designs and builds robots and AI solutions that prepare food for the nation's leading restaurant chains. So our most popular and most well-known product is Flippy. It's an overhead robot on a rail that installs over a fry station and takes over all frying operations for quick serve restaurants.
Yeah, I'm watching on your, I guess it's your crowdfunding page. I'm watching the sort of video animation in the background and watching this arm dip the fries, pull out the fries, dump the fries. You know, it's really amazing looking. That's cool. And where is Flippy working today?
Yeah, so Flippy is early in life. Well, let me back up and say Flippy has been in development for about 6 years. Okay, so robots are surprisingly easy to get one working. Like the kind of a prototype is easier than what most people think, but to get a bunch of them working is a lot harder than what most people think. So it's been in development for 6 years. And we just now, Nathan, in the last, frankly, this year, 2022, turned the page in the company where we're no longer in R&D mode, trying to figure out a lot of stuff and kind of prove out technology. We're actually in commercialization mode. So we are building robots in a factory in Ohio. We are shipping them to restaurants, and in those restaurants, they're actually cooking food and preparing food for humans as we speak today. Now, that all sounds grand, but it's still early days. We're in the dozens category still, like in terms of the total number of robots kind of deployed, barreling towards the hundreds category, which will be kind of later this year. And as you can imagine, given everything that's going on in the labor market, we have this tidal wave of demand. We have so much demand for the product that we're going to be shipping Flippies, from hundreds to thousands per month for many years from now.
Yeah, I was going to mention that it's like the tailwinds couldn't be better for you guys. Just you hear everywhere how hard it is to get people, to hire people, to get them to actually come to work.
Yeah.
Once you've actually hired them, they don't show up, right? Robots don't have all these issues. That's fortuitous. So that's great. What was the quick backstory of Miso Robotics? Were you does this come out of academia, or were you doing robotics in other companies? What's the story?
Yeah, I'm a hired gun. So I got brought into the company about 4 years ago, originally in the board, and then 2 years ago in an operating role as CEO. So, but the company was actually born out of academia. It came from a number of individuals, many from Caltech, and one was kind of a restaurant entrepreneur, and the other was really a venture guy doing a lot of automation stuff. and kind of put two and two together. Now back then, it wasn't just this brilliant foresight about this labor shortage that was going to occur. There actually was one even back then. There was a shortage in this world of quick serve and fast food restaurant employees. It was called a labor gap. Today it's called a labor crisis. So when the pandemic came around, it took that labor gap and it just blew it up. And there's just now something like 1.6 million open positions, and so we're super fortunate to be in the right place at the right time, but we were also pointed towards the same problem when the company was founded 6 years ago.
Yeah, it's interesting. Very cool. I guess, I don't know how much you can disclose, but how many of these, it sounds like manufacturing is probably the rate limiting factor here. How many can you manufacture per year? Or what's I think of it almost like Tesla's issue, right? They have more demand than they can build cars. So Elon's estimating how many they can build. What do you guys say?
Yeah, no, that's exactly where we're at. And it is the question. Okay. And the candid answer is we don't know how many we're going to build. We can build, we're going to find out. But let me give you some more color. The robots, like robotic arms, if you will, those are, we essentially purchase those kind of as is. They've been around for a long time. They're generally used in logistics and manufacturing, sometimes in certain things like even like, surgery. So there's robotic arms that exist in the world today, but there just aren't that many applications where you need hundreds of robot arms, for example. You know what I mean? If you're talking about a pick, pack, and ship, warehouse facility or a manufacturing facility, you can't look at those and say, oh, you're going to need 1,000 arms in each one of those buildings. The numbers just aren't that big. Now you pause there and then turn the page and look at the restaurant industry. You have chains that have on average between 1 and 3 and 4,000 locations. Jack in the Box, 2,200 locations. Chipotle, 3,000 locations. Panera, almost 3,000 locations. Buffalo Wild Wings, 2,000. I can go on, but the point is, each one of these customers that I mentioned are in conversations or pilot actually with Miso Robotics, and the world simply hasn't put out like tens of thousands of robotic arms like this before. Okay. And robotic arms are only part of what Flippy contains. Flippy contains a whole bunch of other technology and, in the frame and shield and cameras and all kinds of stuff. So we're looking at a really awesome, but ominous challenge of saying, okay, how do we deliver the demand that lies ahead of us? And we're kind of going there, and there's no silver bullet in this. There's basically just a lot of really good rigor that needs to apply to the steps of building out a supply chain, building out an installation team, building, getting your vendor base with second and third sourcing. There's just a whole bunch of steps to it, and we're going to continue to grow the number of units we can ship month after month between now and as long as we can foresee.
Yeah. Okay. All right. Let's talk about raising money for this. How much have you guys raised and over how many rounds?
Yeah. Okay. So you might find this interesting. So the company, like a lot of startups, went through what you might want to call a pivot. Okay. So it raised a Series A and a Series B, and it was around $15 million. Okay. And this was back in 2016, 2017. And that money was raised from traditional venture.
Mm-hmm.
And what happened, and this you know this real well, Nathan, is a lot of early stage startups that when they bring a product or go to bring a product to market, the fit doesn't occur or things obstacles emerge. And that's kind of what happened with Miso. So Miso and the original management team never really was able to find the one product market fit and customer fit for what it was developing, and so it had a restart of sorts. And that was right around 2000 and call it 19, end of 19, when the company decided that it needed a new capital and a new direction. And this thing called crowdfunding had emerged. There's a new set of legislation called Reg A that allowed private companies to raise capital in open markets from individuals that weren't just accredited investors, just normal individuals. And so we started that in 2020. And a lot has happened in that journey. I'm happy to kind of come back and kind of tell you about that journey. But to get to the chase on your answer, we'll raise about $60 million this way. through a Series C, D, and E,
Hmm.
and believe we're one of the largest companies, largest fundraisers ever to occur using this type of fundraising.
Okay. Big question is why crowdfunding instead of going back to the venture world? So take that as you will.
Yeah, no, you're right. That is a big question, right? And I guess the short answer is because we could. Okay, so it is a terrifically efficient form of raising capital. Okay, the other part of the answer is Nathan, that we probably would have been looking at a down round. Okay, the company needed to go out for a Series C, didn't have any customers or product, and was looking at a kind of a tough slog of saying, all right, let's go raise some more capital in a pretty unhealthy environment. So crowdfunding has some really compelling advantages to it. One of them is that you can package up the offering, so all the classes kind of vote, all the shares kind of vote as one in a proxy. So it's pretty easy to organize and manage, bringing in literally thousands of individual shareholders. Okay, and in the second reason it's kind of uniquely efficient is that this type of financing doesn't require the typical rigor or scrutiny that a venture or private equity firm might apply. And so they're basically a lot of individual investors, maybe kind of call it the Robinhood crowd or whatever you will, who look at it and say, okay, this is the future. I believe in it. There's going to be robots doing this forever. And so I believe in it. I really don't need to know a lot about the valuation or the preferences of the stock or the use of proceeds. I get it and I believe in it and let's go. And so the average investment's around $3,000. And at this juncture, we have almost 20,000 people that have put that money in.
That's a lot. Very interesting. Now, a couple questions. Well, so there's some of the advantages, I guess. What are some of the risks or challenges or disadvantages of crowdfunding? Obviously, finding 20,000 people to write checks is probably a bit of a challenge, but you tell me.
Yeah, no, it's not a good fit for a lot of companies, especially tech companies, because the fact of the matter is you need to be able to tell the story really simply and really clearly, and it needs to resonate with people. Okay, so there are some really interesting, exciting AI solutions that are being brought to bear, but those may not be clear enough or obvious enough for crowdfunding. Someone looks at a picture of Flippy too, on the other hand, and sees Flippy cooking fries. Say, okay, in an instant, in a billboard instant, they kind of get what it does, and so and kind of get the nature of the company. So it's not a good source of capital for companies that have a somewhat complex product or really need to tell a story or explain it, or if it's even like a B2B product, it may not be a good fit. So it's not for everyone. But if it is, the other part of your question is like, the disadvantages, you really need to go out and market the heck out of it. Like you need to be able to get enough eyeballs on the offering that the math works and that people are exposed to it and say, this is great. I think I'd like to invest. That works super well for Miso because we've been fortunate to get a lot of press. We get a lot of free publicity because of the nature of who we are and what we're doing. It's a very interesting story right now. But without that, it's a super hard challenge.
Yeah. Interesting. So let's get into the process of marketing this deal. I notice you're on Wax Invest. I've never actually heard of this platform before. So maybe tell why you chose that and how are you marketing this to? Well, a two-part question. Why Wax Invest? How are you marketing this deal? And are you primarily marketing to non-accredited or accredited investors, or both equally?
Yeah. So Wax Invest was a platform developed by a company called Wavemaker. It's a wavemaker.vc. They're out of Southern California. And they developed this platform. It's super stable, super scalable, plug and play. It's a great platform. Okay. We also work with them to actually go out and promote this offering. And it's largely non-accredited investors. It's generally it's the general public, but we're targeting people who are researching stock, looking at stocks. So we're kind of going to all the normal watering holes where you might find kind of active amateur investors. And we put a lot of effort into communicating everything that's going on about the company. We run ourselves exactly like a public company, so we have annual shareholder meetings. Our financials are reviewed by the SEC. We, constantly publishing and putting out information about, how we're doing and how we're performing. And so there's a bit of effort that goes into not just getting exposure for the company, but also just investor relations for 20,000 human beings who want to know how you're doing.
Where are the watering holes you allude to? Where do you find 20,000 non-accredited investors?
Yeah. Well, by watering holes, what I mean is, websites or newsletters or, places where people go, frankly, who are interested in investing. Okay. So there are newsletter and websites about pre-IPO companies. There's a number of them that are just spawned from just the normal finance websites that exist in the world today. And having been at it for a number of years, we generally capture a lot of interest, and people submit their emails to us saying, "Keep me posted. I may not want to invest, but I want to learn more." So we've developed a really large database of human beings that want to keep an eye on us. And as we're doing that, as they're kind of keeping an eye on us, we are, the company's performing well. We're fortunate. We keep having some pretty monster announcements, some press releases that kind of talk about the momentum.
Mm-hmm.
And that helps a lot. And the nature of these campaigns, Nathan, is like we're in a Series E right now. Is they don't run in perpetuity. They're open for a predetermined period of time at a set stock price. So
Mm-hmm.
the stock doesn't vary, day to day. It's kind of a set price, a set valuation. We put it out there, and we just announced that we're going to close it on January 23rd. And so there's a finite amount of time where people can buy stock in a company like Miso, and there's no guarantees or any assurances that we're going to open up a Series F or a G or anything else like that. And so I think people look at it rightfully, like if they want to get in early while we're still early, there's no guarantee there'll be another chance to do so. So that helps a lot in kind of getting interested parties to kind of take the plunge.
Sure. I'm going to keep on this question a little bit till I get the answers. I'm teasing, but like literally, what are some of the watering holes you're talking about? Like, what are the websites? Are you talking about Reddit? Are you talking about, if someone, maybe ask it a different way. If someone was thinking about doing a crowdfunding campaign, maybe they're in a different space, but they want to kind of borrow a few pages from the playbook, where would you advise them to try and drum up some interest?
Yeah. Fair caveat warning is that this is not my area of expertise. So I'm not like letting you, I hire really good marketing teams that understand very precisely how and where to market, expose me. So I'm not involved directly, but to try to give you a more precise answer to your question, there are websites like Early IPO. There are a number, and there's really none other that I can think of off the top of my head that I think would be noteworthy to mention to you. But we do get a lot of exposure in news sites. When we have press releases, we've got a whole bunch of the normal places you'd imagine that we would be found. We were on Axiom, we were on Yahoo Finance. We've been covered by Fox News. So a lot of these news channels themselves will be places that we'll advertise on, in addition to just being covered there.
When you get on whatever, Fox News or whatever, are you somehow able to get a link to the crowdfunding portal in there, or do you just sort of mention it as part of that? I'm trying to really just find some tactics that could be adopted by others. Like, are you able to get kind of your link plugged?
Yeah, no, for sure. So what we have is probably best thought of as a digital marketing team that looks just like an e-commerce marketing team. Okay, so we've got people that do a bunch of social exposure. We have a press team, of course, and a really good PR agency. But there's just media buyers who are looking at places to buy, and then their email marketing lists. And the people do that. So it's really a full digital marketing team. And these are deep science people. They're not, they know their trade quite well. And in what they will be doing is constantly, creating and looking for more content to produce and get exposure with that. We spend a lot of money. Like we put a lot of money on the table to bring in a lot of money. And so when I say it's like an e-commerce team, it's very much like, there's top of funnel investors, there's conversion rates, there's money you throw at the people in the funnel that actually have to return a specific conversion rate to be profitable. And so if any of your listeners have ran any kind of digital campaign where they're marketing in a number of different, channels to an audience, it's just like that.
Yeah, that makes sense. That's probably a good way to think about it too, as a startup trying to raise crowdfunding. Do you know, and maybe I only know a little bit about crowdfunding, are you able to actually like run a Facebook ad saying invest in Miso and a link through to the site? Like, can you be as explicit on that on marketing and advertising?
You can't be as explicit as saying buy stock now, invest now, but you can actually bring people to your site to learn more. And when they come to your site, there's a big invest button. Okay. Mm-hmm. And once they register and say they have, expressed interest, then you can market to them and say invest now. But the laws around this are important to know, and I'm not the source of that. So the clarity on that comes from just getting a good attorney who understands these laws and can kind of give you the guidance you need to. And the laws are new. They're just a couple years old in terms of this being able to kind of democratize investing for the rest of the people that they're really only venture capitals have been able to do this before. But for your listeners, what I would say is check out Wavemaker if you're interested in wax, find a team that can do, a robust digital marketing campaign in kind of all channels, get some good advice from a lawyer who knows this stuff. And there's platforms that help all the time. Seedvest is one. There are others that kind of, take you cradle to grave through the process. I don't know the success rate. I don't know how many of them that try crowdfunding actually leave having, generated enough money and have it be, really effective. But I will tell you that we're fortunate to be somewhat of an outlier in kind of what we're doing, but it's still a brave new world out there, and there's just a lot of stuff to be learned.
Do you know, maybe this is handled by your team, so you might not know it, but if your average check size of a crowdfund investor is like $3,000, something like that, what is it costing you to acquire that customer, so to speak? Really kind of putting on that e-commerce, metrics rubric. Any idea?
No, it's exactly right. It's the heart of the matter, and it's a super thoughtful exercise to go through, because if our minimum investment's $1,000 and our average investment is around $3,000, then you look at it and say, okay, how much money and effort do you want to spend to acquire that? And there's no right answer for that, right? It comes down to a cost of capital equation. And if you can look at it like dilution as well. Like if you go to venture firm and say, okay, I'm going to, my cost of capital to bring in $10 million is I'm going to lose 30% of my company. It's kind of a similar exercise. So if you were really crazy desperate and really needed capital and say, okay, I'm going to spend 50 cents to bring in every dollar I can. Okay. That is pretty expensive. You're going to have a lot of effort. But yet it's still, I would say a profitable endeavor. The other equation to consider in this consideration is what's the valuation, right? Yeah. Because the thing about crowdfunding, it generally affords a higher valuation to companies. Retail investors are less sensitive to what that number is, and they typically don't, they typically don't need to calculate what percentage of ownership does $10,000 get me, you know what I mean? And so if you can get the valuation to be higher than you might get in a normal fundraise through private equity or venture, then you might be able to say, okay, I can spend 33 cents to bring in every dollar, and I can do that all day long and be super happy with that, because I'm doing that at a $40 million valuation instead of bringing in $10 million at a $20 million valuation through venture. So that's a really important part of the equation. We think of this 50 cents on the dollar or whatever. We think of it as ROAS, return on ad spend. And so it's a reverse figure where it's like, instead of 30% on 30 cents a dollar, it's the other way, where it's like, if we can get a 3-to-1 or 4-to-1 or 5-to-1, return on ad spend at a high valuation, let's keep the foot on the gas and go. That is a really good formula, particularly, evaluation. We're valued right now at $500 million, so it's a really good number. And so we're able to take a lower ROAS and and still think it's a good financial decision. Does that make sense?
It does. Yeah. It does. That's interesting. And would you say, like, I was kind of thinking of, like, in the SaaS world, a 3x value, if you're spending $300 to acquire a customer, but it has a lifetime value of $1,000, like a 3x kind of CAC to LTV ratio is very desirable, or kind of the standard.
Yep.
Would you say it's, like you said, sort of a 3 to 5x return on ad spend to acquire a crowdfund? Is that sort of a rule of thumb that's a reasonable thing that people might, march to?
Yeah. You hit the 5 ROAS, you're high-fiving. Like, that's right home about that. That's a good number.
Yeah. Interesting.
Yeah.
Okay, good. So I won't keep you too much longer, but, kind of running crowdfunding like e-commerce or digital marketing campaign, monitoring your cost to acquire investors, having set timelines to help create some forcing function, scarcity, I guess you could say.
Yep.
What other things are sort of keys to success if you were advising me or coaching me on setting up a successful crowdfund?
Yeah. Line up your PR strategy to be synced and timed with the whole campaign. Think of it as kind of a drum beat that goes to a big crescendo, So for us, we have a lot of activity going on in the marketplace, and we work with our partners and kind of say, okay, when we announce that we're opening around and we're available for, the stock's now for sale again, it's like, oh, by the way, we just got Chipotle to commit to us, so it's kind of like, that goes kind of hand in hand. And then what we'll do is kind of continue the drumbeat with another kind of meaningful announcement every 3 to 4 weeks. And at the end, when there's, X days left, we're going to have a pretty big unveiling of, like, all right, here's some other monster news that's occurring right now. Having that backdrop is super important. Otherwise, you're just ad spend, right? And like you said, you nailed it, Nathan. It's scarcity. People need to look at it and go, okay, this is an attractive company. I don't know if I should do it or not should. All of a sudden, it's like, guess what? The opportunity is going to be gone soon. This is the last chance. So, speak now or forever hold your peace. And that's an important element to build into the campaign.
Do you have any sense of, there's a lot of chatter right now that the party's over for tech startups and venture capital. I mean, the venture guys are getting a little more tight-fisted, slowing deals down, slowing the pace of deals, all that stuff. Do you get a sense of any change in the crowdfunding market at this time, kind of on a macro sense?
It's softened a little. It is with what's going on. We were really worried about what's going on in Eastern Europe and whether that would affect. And it's had maybe a 10 to 15% softening of the market, but not crazy. And so I don't know. I'll tell you this real quick. Our very first crowdfund started in March of 2020, right at the beginning of the pandemic. And we thought, we're doomed. This is never going to work. And the opposite happened. It actually turned out to be a thing that blossomed in during the pandemic, because people kind of said, look, I don't want to invest in the stock market. It's not going that well. And so it picked up a lot of steam.
Plus the stimulus checks probably helped, right?
Yeah, too. The stimulus checks, no discretionary spending. There's a whole bunch of things that kind of work together. So it's just too new to know kind of what goes on right now. But I've been raising venture capital my entire career for many, many more years than you want to know. But I've seen it retract and come back and retract and come back, so many times, and they're retracting right now, and that's kind of what goes on, and so it doesn't make it impossible. It just makes it, harder and harder to get a deal done. If your listeners have the ability to explore crowdfunding, I mean, that is, I think it is a safe vestige at this moment, is what I'll tell you.
Interesting. All right. Last question. You've been around for a long time. You've done lots of venture raising. Now you're doing lots of crowdfunding raising. Do you like crowdfunding a lot better? I mean, is it a lot more fun, a lot more interesting? Is it easier? Is it just different? Like, what's your sort of contrast and compare?
Yeah, it is so much easier. And two things. One, it's easier. And board meetings are nicer. Okay. So when I've spent my career trying to take institutional money that's been put into my companies and deliver well for them and really try to be that guy. But things are not always smooth, man. If the line to success is jagged, and so you just been in those board meetings like, no, we had a couple tough quarters. Here's what we're doing, but here's what's going on. And those, I don't have those anymore with crowdfunding. Like that's just not. I have shareholder meetings, and they're friendly, and there's just 20,000 people, and that's not saying everyone's happy, but it's just a different environment to run a company in, without kind of, institutional investors, at the table. And it's easier because I'm not, traipsing up and down Sand Hill Road, doing my thing. And, that's necessary. It comes with the territory, but boy, that's a lot of work too,
I would almost think that's interesting though, because I almost think that I've never crowdfunded for clarity, have raised venture capital. I'd almost think that having 20,000 people who, granted, they might not have a direct connect telephone line to your ear, but having that many voices and chatter, and probably some of them are angry or crazy or whatever, might be almost more stressful than having a small board that you've got to manage. Is that true at all?
So people reach us. We have kind of investor relations team. So they reach us. There's, the sundry of, emails or requests or this or questions, whatever. But that doesn't land on my plate or my management team's plate. And so we're able to kind of, offload that a little bit. But you bring in $15 million from a private equity firm, venture firm, and that does land on you. The work associated with that does land on your plate. And so it's outsourceable a little bit with crowdfunding, if you will. And generally, when you have, shareholder meetings with thousands of people show up, most of them digitally, those are, that's kind of like standing at a stage, you're not really getting heckled or anything. You get questions, but you don't get, you don't get the tenseness that might be in a boardroom, if you deliver a couple bad quarters.
I see. Interesting. All right. Well, let's see. If people want to learn more about the company, it's misorobotics.com. Do you want to give the URL or any plug for the actual crowdfunding campaign, which is still open and ongoing?
Yeah, it's misorobotics.com/invest. And you can learn everything about us on our website, on the invest site. But appreciate very much the opportunity, Nathan. Thank you for the attention today. It's
a really cool looking product. I mean, it's neat to watch it in action. So that's, hopefully we'll see it roll out here in Chipotle and we'll be able to watch it live and all that good stuff. So
yeah, we're just warming up. Stay tuned.
All right. Very good. All right. Thank you, Mike. Misorobotics.com/invest if people want to check it out. Have a great day.